welcome to this second installment from your GoNoGo Charts educational series. Thanks to all of you StockCharts users for tuning in to today's session, where we're going to continue to talk about trend identification and how we can actually use these tools in a practical application. Alex, how are you doing today, my friend?
I'm very well and ready to go.
Awesome. So we talked last time about the problem with technical analysis, and by this we mean our objective is to remove subjectivity, to remove our emotions from trade decisions. However, with all of the powerful tools at our disposal, when we get a complicated chart, when we have a robust checklist with a lot of tools embedded, it can reintroduce a lot of analysis paralysis, a lot of subjectivity and interpretation in the hands of the analyst, trader, or portfolio manager. We want to remove that subjectivity and avoid that analysis paralysis while keeping our focus on price. So Alex, talk to us a little bit about GoNoGo Trend, just as a refresher.
Yep. So if you've seen our first video, you'll be familiar with this image. And what we tried to do with GoNoGo Trend is take all of the valuable information that we discussed when building that discipline checklist of trend identification, but blend it into something that color codes the price bar so that you are not left with that problem chart. And we hope that then the solution becomes simple, elegant, and informative, because you know what the trend conditions are without cluttering the chart.
Now, of course, we know that keeping our focus on price is critically important for understanding those key areas of support and resistance. We talked about the concept of polarity last time, and we're going to touch on that again today. But this doesn't just come from Alex and I. Famed trend-following investor Mark Abraham says that ultimately it's the dollar-weighted collective opinion of all market participants that determines whether a stock moves up or down. And that consensus is revealed by analyzing price. Now, we're not here to tell you that fundamental disciplines are not important. In fact, over the long period, fundamentals are the drivers of all these long-term trends. What we want to steer away from is a lot of the narrative and the storytelling. And if you've been listening to financial news media, you have heard that the sky is falling, that we are up for a deep economic recession, that the world is collapsing around us. And yet the market has a very different message. And by paying attention to what the market is telling us, we can stay on the right side of these trends. So, quick refresher, with all of that computation happening in the back end, having that robust checklist for a complete technical picture, remind us about those colors, Alex.
Absolutely. So we have 5 stages of our trend identification with the GoNoGo trend. We have 2 forms of the bullish environment. Those are our Go colors. And those would be the strong blue bars, would be the strongest of the Go trend, the strongest bullish environment. Aqua would be a weaker environment. That would be our weak bullish moves. Amber in the middle, of course, are our neutral bars. And we like to talk about the Jesse Livermore quote that there's a time to go long, a time to go short, and a time to just go fishing. So we call those our Go fish bars, when the market is not giving us enough to be able to identify a trend in either direction, up or down. And then our 2 forms of our bearish environment, we've got pink bars, that's our weaker no-go, and then strong purple bars tell us that the bearish environment is strong or strengthening.
And so on this weekly chart of the S&P 500, we can see all of these trend conditions. And this, of course, is showing us that 2022 bear market, where we saw a lot of damage being done at the index level and certainly at the individual security level. Here, where we have a weaker form of the bearish conditions, we saw a lot of very seductive relief rallies. A lot of times when, and we were all a part of this, rooting for the markets to finish their downtrend and to resurface. But when we are still in a no-go territory, we avoid all of the chop, the anxiety, the uncertainty of those bear markets. And of course, as the bottoming process takes shape, there are enough conditions within the background computation in our trend model that we got to neutral before we saw that trend change. The most important concept, if there's anything that you take away from this, is that we simply want to stay out of or be short when the conditions are not in our favor. The very title of these tools, Go or No Go, comes from that pass-fail system. And so if NASA is putting billions of dollars of technology into space, they want to make sure that the conditions are optimal for their success. And the same could be said for you deploying your own investments and your capital or client capital into the markets. You want to make sure that the probabilities are on your side. So Alex, let's review real quick what that problematic chart with a very simple and responsible checklist of technical tools might look like.
Yeah, so this is the trend identification chart that we built in video one. And basically, we remember that it was a simple process. But even just going through 4 or 5 different concepts to stack the weight of the evidence in your favor, you end up with a chart that becomes a little harder to read. And you have a chart now where we're trying to make decisions. We're trying to be subjective. We're needing to make analysis on whether or not Bollinger Bands are narrow enough, whether or not we're seeing enough volume on what we're seeing happening in price, where are we making new highs, and where's price relative to a moving average. So we're having to make these decisions, and we're clouding our chart with indicator after indicator, and that leads to the problem chart that we showed at the beginning.
And as many technical analysts will tell you, if you rely on a single indicator, let's just pick on MACD, which is a wonderful tool created by Gerald Appel, we'll see many signals, right, where the signal line is crossing, where the MACD is crossing above or below its signal line. And I think for a lot of investors, no matter what time frame you're on, over trading can be very damaging to your P&L. So when we look at this weekly chart of the S&P 500, we could consider that there was an entry in 2020, an exit in 2022, and a re-entry in 2023, right? We want to simplify the interpretation and the subjectivity. And let's keep in mind, no one was feeling particularly bearish in terms of broad-based sentiment near the top in 2021. Towards the end of that year, there was a very frothy market. Everyone was releasing SPACs. We had meme crazes, cryptocurrencies through the roof. Everyone was diamond hands and just buying the dip. So we want to get away from that sentiment in both directions. Same thing here in 2023. This is one of the most hated bull markets that we have seen because the dominant narrative from macroeconomists is that the world is ending. But if we just listen to the message of the market, we can participate in those trends. Now, we've been showing some longer term weekly charts. If we look back to 130 years ago, Charles H. Dow told us that the markets are fractal. They move in multiple time frames. And as an accomplished nautical sailor, he used the analogy of the oceans to compare movements in the market. He said that primary trend, that unflappable, not guided by investor emotions, not just reactions to the news of the day, but really guided by the expanding or contracting gross domestic product, the fundamentals of the underlying companies that we are investing in. That primary trend is going to take shape over very long periods. And that's the underlying bias or the general drift of the market. And we have seen in the S&P 500 that is largely up and to the right. But we know that markets move along multiple time frames. So Charles Dow talked about the secondary period. And that secondary period he compared to the waves on the ocean. Now, it's going to move generally in the direction of the primary trend, but we're going to see these periods of extension or retracement above and below that primary trend. That's the emotional impact of investors on the reaction to the news of the day, the reactions to the fundamental stories that are coming out. And Charles Dow also identified the minor trend or that tertiary period. And there he referred to the ripples on the surface of the water. And those very short time frames, many of you may trade very short time frames intraday. You can also use technical analysis in the same way. The tools apply in the same way across all time frames, and certainly understanding the nature of that primary and secondary trend, where we're at, can help you in placing those trades. So let's walk through this in practice, Alex, and let's just pick on the mega cap stock of our day, Apple.
So starting really, really long term with a monthly chart here, you can see, I mean, what an investment Apple has been. Dating myself here, I remember a long time ago thinking, man, the iPod is the best thing ever. And man, if you'd have put a couple of dollars into Apple back when it released the first iPod and changed the face of listening to music forever, you see what kind of results you'd have had. And what's interesting about this chart, Tyler, is that you've got the trend painted on the chart through coloring those bars. And you can see that it's just blue and aqua the entire time. But what is interesting is that by understanding the trend, you can still do really valuable traditional technical analysis. And if you look at this chart, what jumps out is that every time price makes a new high, when it pulls back, it sort of finds support then at that prior high. So that's just technical analysis 101, breaking to new highs, retracing back to test those levels of support from the highs before, on the left of the chart. And it happens over and over and over again. But you can see that on all of those pullbacks, the GoNoGo trend indicator is showing the weakness by painting mostly aqua bars. So you watch it, you see as it pulls back, does it fall out of the trend or does it continue to stay with aqua bars? Does it find support at prior highs before moving on to then paint stronger bright blue go bars? And it does just time after time after time. So a really remarkable chart of Apple here.
So more than a decade of information, we are looking at monthly price bars. We could be looking at quarterly return on equity and see a similar trend, right? The fundamentals of the corporation, Apple Incorporated, are very strong, and their products have continued to generate cash flows that then work into the valuation models, and investors are willing to purchase stock at higher and higher price levels. So that's the collective opinion of all investors, as Mark Abraham told us. That is what the evaluation of all of that fundamental data is telling us. Now, if we jump down to a weekly time frame, right, and just keep your eye on this 2022 bear market, right? On a monthly basis, we were still in a go trend, and we can see that we came back down to test those prior highs and found support. So if we look at that on a weekly basis, we can see that the trend conditions were in no-go, right? We wanted to get out of Apple in that downward corrective phase. But of course, where we found support, the weekly trend re-entered the go conditions here in 2023. And what's interesting, Alex, about this trend model is that we often find points where we've broken significant trend lines, horizontal or trend lines. We see changes in the go-no-go colors. Those trend conditions line up, anecdotally, with major inflection points and critical price levels. So it's important to keep our eye on price so that we could spot all of that important activity. And here we are right now with Apple consolidating above those prior highs here on the weekly basis in strong go conditions. But let's keep going down the time scale, Alex. Let's talk about the daily chart.
Well, the daily chart is just a beautiful chart with not a lot to say other than look at that trend as it's progressed. You would like to say that a trend takes the stairs on the way up. And that's really what you see here, a series of higher highs and higher lows. And you can see how GoNoGo trend paints the weakness. When price comes back just a little bit, we can see those aqua bars. But you can see that then it surges ahead again on the stronger blue color as it makes new highs. And like you said, right now we are just off these most recent highs that are consolidating higher than the highs we saw on the weekly chart. So you line that up then with the fact that we're still in that go trend on the monthly chart. You'd probably be looking for opportunities to participate based on these smaller time frames.
And so if we just think about that monthly chart for a second, we could be buy and hold investors and have just owned our Apple position for a decade. But there are a lot of career-ending moves along that trend where clients would not tolerate those kinds of losses, 30%, 50% retracements, and still hold on as a trend follower. That's psychologically very difficult for a lot of clients to do. So we know, working with a lot of our portfolio manager clients, that they will trade around a position. So start to think about how these multiple time frames can work to your advantage. You know that the very long term, that primary trend is to the upside. There is sound fundamental basis to be investing in Apple. And then we know that on the weekly chart, we are also in a go trend. Now, within that weekly chart, we will also see corrections or retracements. So if we're trading around our position, always knowing that we want to capture to the upside, we might use a daily basis to capture those trends to the upside and exit when it is in a corrective phase. But it doesn't have to stop at the daily chart, Alex. We know a lot of folks are using even smaller time frames. Let's talk about an hourly chart of Apple.
And you've got to remember that technical analysis is, of course, used by people within the industry, all kinds of different market players and different roles within that industry. And so you may be working with a trader who's trying to take a position on behalf of a portfolio manager who has just that view that you just expressed. So he might go down in timeframes to try to make sure he captures a good entry point, relative to, however he's evaluated, probably with the VWAP or making sure that he gets a good price on the day that he's trading. So you could go down to the time frame knowing you're trying to get a long position and look for any kind of go signal on the shorter time frame. So you can see here we've had a go trend that's lasted several days on an hourly basis that we've just moved into neutral bars. So as somebody looking at the smaller time frame, we know that good technical analysis should work the exact same way because it's fractal in nature. And so you can keep going. You could even go down to a 1 minute chart for people that are day traders or trading, trying to fade moves that they see on a daily chart. And you can see, look, on a 1 minute chart, you could have been short for the whole of this day and faded any kind of move that you've seen on the daily, week chart, and of course those longer time frames. So just an illustration of whoever you are, whatever your position in the markets, whatever your risk tolerance, technical analysis should work the exact same way on all time frames, and as we'll see now on asset classes as well.
And that's exactly the next point. Working with a number of currency desks, shorter time frames make a lot of sense for those investment banks. And so having a technical tool that works across any time frame in the same way can be very helpful. And I would encourage all of you to, when in doubt, zoom out. So if you're seeing a lot of chop in your charts that's perhaps on a shorter time frame, take a step back and look at what the daily or weekly chart are telling you about the general drift, the general direction of that security or that index, so that when you're placing your trades on those shorter time frames, you know the underlying direction of the market and you can place that with confidence. But as you mentioned, Alex, this is not just an equities game. We've got a lot of asset classes that we can use these tools on and use them in the exact same way. So John Murphy, a fellow CMT charter holder and one of the original authors of Intermarket Analysis, highly encourage all of you to pick up John Murphy's multiple great best-selling works. But also, Alex and I have been students of the market for a long time, and through the CMT program, read a lot from Marcos Katsanos and others who helped to quantify the correlations between multiple asset classes. Now, we know markets are here to frustrate as many investors as possible. Those correlations can change over time, like we're seeing this major generational inflection point in interest rates, breaking that 40-year downtrend. But we know from these other markets, there's a ton of valuable information. So you may not be trading fixed income or currencies or even commodities, but you can pay attention to those markets to help understand their influence on the equity space. So let's use some GoNoGo trend. Let's talk about the world across the asset classes, Alex.
Yeah, and like you said, you may not be directly investing in these markets, but with ETFs now, you certainly can get exposure to those markets in the equity world. But just as a quick going around the asset classes to give you a sense of that environment, you can see that equities right now, these are weekly charts. Equities in a strong go. We can move across and see that treasury bond prices, actually these are rates, I believe. Sorry, these are of course rates that move inversely to bond prices. Rates are elevated. They're in a go trend as well, painting strong blue bars. If we move over to crude oil, we can see that we've been sort of meandering lower on oil for some time now, and we're in a strong no-go. Not much happening there. We're right in the middle of the sort of a downward sloping trend channel, but strong no-go bars for crude oil. We move over, we can see that Bitcoin is in a go on a weekly basis, taking some of that frustration and some of the stress out of the trading the smaller time frames. You can see that Bitcoin has come out of a long no-go and is now in a go trend, painting a stronger blue go bar. And gold, of course, on a weekly basis has seen a lot of weakness. We can see all those aqua bars coming in, but still painting weak go bars. And the dollar, of course, the last one on the right here on the bottom, is in a weak no-go at the point of making these slides, I believe, flirting with amber bars as we speak. So the dollar trying to decide whether its no-go will continue or whether it'll reverse at some point back to a go trend.
Absolutely. And we know that the influence of treasury rates, the influence of strengthening or weakening US currency is going to impact our equities investments. A lot of that inflation that came out of rising commodities prices in 2022, we can pay attention to those markets to understand what sectors of our equity markets might be working. Or, as Alex said, there was a time in 2022 when the only trend that was working was cash or oil. And so we know that there's going to be a trend somewhere through a lot of the ETFs and frictionless trading that we have today. We can get exposure to those trends in a lot of different ways, even from equity vehicles. Now, if you don't have the time to do a whole lot of global macro analysis and read all the books by Marcos Katsanos and the great John Murphy, I would encourage all of you to check out GoNoGo Research. Every week, we're publishing Monday morning pre-market a flight plan that takes a top-down approach, starting with those asset classes, looking into the sector groups, finding the industry subgroups, and then the individual names that are set up for the greatest probabilities of return. And then, of course, on Saturday, we like to practice what we preach, which is to step back from the market, remove our emotional bias, and take a broader look at a lot of longer-term charts in the Launch Conditions chart pack every Saturday to help us get a sense of what that broader picture of the market is telling us. So you can check that out right at GoNoGoCharts.com. We want to thank all of you for tuning in to this educational session from GoNoGo Charts. Hopefully you are using these tools to your advantage. They are available right on StockCharts through the ACP plugin. If you have any questions, do not hesitate to reach out to us, info@GoNoGoCharts.com. And until next time, be safe, take care of each other, and trade them well.